Well, it's time for Afternoon Business. Welcome to Business Incorporated, and here's what we have prepared for you. There's a warning from the African Development Bank that the continent, especially a country like Nigeria, could lose up to $20 billion. Good news for inflation in Zimbabwe. That has eased a bit, 3.2%. And Egypt is getting the most of foreign direct investment that's coming into Africa. Welcome to the program. I'm Ini John McCoy. We start from the global oil space as usual. Prices have extended their losses today after a pause in fighting between the United States and Iran held, raising hopes for a de-escalation in the Middle East conflict that has upended energy supplies in the last few days. So with international benchmark Brent crude futures for September delivery, we've seen it drop even further this afternoon, more than it was in the morning, 1.82% down at $81.10 a barrel. And then that's for WTI, but for Brent, it's 2.11% at $86.50 a barrel. And then we see that also extend to natural gas. Natural gas is down 0.76%, $2.75 per MMBtu. And of course, a lot of hope hanging right there because of the reports of diminished U.S. munitions. And President Donald Trump said that he was considering a massive attack on Iran. Later, he said those plans aside and amid arms stockpile concerns. Closely related to that, we see also for metals. Metals also is feeling that drop, even though yesterday we saw it, on the flip side. But for this afternoon, we see that spot gold has dropped almost 1.5%. The price is $4,018.10 per ounce. Spot silver is down 2.35%, and the price is about $57.32. Platinum is 2.14% in the red, $1,597.20, and palladium 3.42% down, $1,252.50. While copper is just about 1% down at $6.31 per pound. And then to other stories now. Zimbabwe has commissioned its first lithium processing plant. That marks a major milestone in its bid to become Africa's leading lithium producer and move up the battery minerals value chain. The facility will process locally mined lithium into higher value products, reducing reliance on raw material exports and supporting the country's industrialization agenda. Officials say that the investment is expected to boost export earnings and create jobs and strengthen Zimbabwe's position in the global electric vehicle battery supply chain. The development underscores Africa's growing role in supplying critical minerals that's needed for global energy transition. Still in Zimbabwe, the annual inflation rate has eased to 3.2% in July, and that's down from 4.7% that was recorded in June. This is according to the Zimbabwe National Statistics Agency. The latest figures also shows monthly inflation slowing to 0.1% in July from 0.6% in the previous month, and this signals continued moderation in consumer price growth. Zimstat says that the decline reflects easing price pressures, with the all items Z consumer price index recording a 1.5 percentage point drop in annual inflation compared to what it was in June. And the African Development Bank has warned that a forecast Super El Nino weather event could cost African economies between $10 and $20 billion. It could also slow economic growth and displace millions of people. According to the bank, countries hardest hit by the extreme weather could see their GDP shrink by 1 to 2% as severe droughts, flooding, and other climate-related disruptions take a toll on agriculture, infrastructure, and livelihoods. EFDB's Director for Climate Change and Green Growth, Anthony Young, says that the warning underscores the urgent need for greater investment in climate resilience and adaptation to reduce the economic impact of extreme weather across the continent. The African Export-Import Bank and South Africa's Industrial Development Corporation, IDC, have signed a 3-year agreement to mobilize $8 billion for industrial development in South Africa. The partnership aims to finance strategic sectors, including manufacturing, industrial infrastructure, export development and value-added industries as part of efforts to boost industrialization, create jobs, and strengthen the country's export competitiveness. Officials say that the initiative will accelerate investments and support economic growth, as well as reinforce South Africa's role as a key industrial hub on the continent. To North Africa now, Egypt was ranked first in Africa for attracting foreign direct investment for the 4th consecutive year, recording inflows of $15.5 billion, while also placing second among Arab countries. And so we see here that Egypt, the statistics shows that their inflows are approximately $15.45 billion, and they've been doing this for the 4th time now, the first for the 4th consecutive year, and the share of Africa's FDI that Egypt was able to attract is 20% of total inflows, and then the share of North Africa is 69% of the inflows. So we see that out of all the inflows that come to the continent, Egypt has been able to garner 20% of that, while the other countries, 53 of us, will share the remaining 80%. Unfortunately, change from 2024, we saw that about 66.8%, likely because 2024 included the exceptional 35 billion that came from the UAE. So we say congratulations to Egypt, obviously, which is also going to boost the economy of North Africa, but it's a challenge, of course, to the giant of Africa, Nigeria. We're not here, and even South Africa has not been able to attract as much FDI as Egypt has been able to, and we know Morocco too is also chasing close to that. Angola has raised more than $300 million through the oversubscribed initial public offering of telecoms operator Unitel, and that signals strong investor confidence in the country's capital market. The successful share sale attracted demand well above the number of shares on offer, making it one of Angola's most significant privatization transactions. Officials say the IPO supports the government's program to deepen the capital market, attract private investments, and broaden public participation in state-owned enterprises. And here in West Africa, the International Monetary Fund, the IMF, has completed the final review of Ghana's lending program, paving the way for the disbursement of $371 million in additional financing. The approval reflects Ghana's progress in implementing economic reforms that's aimed at restoring macroeconomic stability, reducing inflation, and strengthening public finances. The latest disbursement brings total IMF support under the program to several billions of dollars as the country continues its efforts to stabilize its economy and sustain growth. Let's go to the commodity space now. Interestingly, we're discussing crab today, a high-value seafood commodity consumed widely across coastal and riverine communities. Well, some people could call it an elite commodity or elite product, but it's one healthy one that attracts some market. We have Tomiwa Ajewale, an analyst from Financial Derivatives Company, joining us now. Hi, Tomiwa. Welcome to the program. Why are we discussing crab to start with?
Good afternoon, Nene. Yeah, as you rightly said, crab is a high-value commodity. Now we're seeing increasing demand, especially in the premium segment of the commodity, especially in restaurants and hotels. With the rising population and the rising income segment of the median income, we're seeing a lot of demand increasing for crab. But why demand is increasing, we're seeing that supply remains limited, and this is because in Nigeria, predominantly a lot of the crab farming is done artisanal farming, where we don't have proper commercial farming like poultry and fishery. Sorry. What we have is that people go to the sea and just catch crabs, so that is limiting the amount of supply that we have. Also, we realize that in recent times, operational costs of fishermen are increasing. With the rise in the cost of diesel to power the fishing boats is also becoming more expensive. So we are seeing operational costs increasing. We are seeing that production is limited because a lot of the farming is still just wild farming instead of commercial farming. So all this is happening while the demand is increasing. So we are seeing a huge increase, a huge rise in the price of crab in recent times.
So can we even say we have an industry for crab in Nigeria, even though we do have the potentials as usual, and Nigeria has a lot of coastal areas? Can we say that we actually have an active industry focusing on crabs?
We have an industry, but like a lot of industries in Nigeria, they are still small, they are still unstructured, they are still informal, and that is limiting the productivity of the industry. So before we're able to be able to really fuel this industry where it can actually be a major source of employment, where it can create job and really boost the income of farmers and fishermen, we need to see a lot of formality in the sector. Basically, we need to see proper linkages between the fishermen, between processors, between the final consumer. So right now we have an industry, but still, like I earlier said, a lot is still largely done by just fishermen going to the oceans to catch the crabs. Meanwhile, we need to go into proper commercial farming where we have crab hatcheries, where there are a lot of investments in producing processing facilities, where we have extension services that are training fishermen and farmers new varieties of fishing, modern ways of fishing, so that they can have proper commercial farming industry, so that we will be able to produce in large extent and be able to consistently meet the rising demand for.
All right, Tommy. Well, I hope we can do that in the nearest future. Thank you so much for your inputs on the program.
Thank you for having me.
So let's go to the markets now and see what's happening. Before then, let's do a little bit of check, month-to-date check on the NGX and see what that has been. So far in this month, this is the final week. By Friday, we'll be saying goodbye to the month of July, and then we are properly in the second half. But so let's see, for NGX, return up to now, so if you invested your funds in Nigeria's local bourse, you would have had 6.66%. That doesn't look so impressive when you consider where we're coming from, but at least it's not a loss. But yet to date, you would have done 58.88% increase, keeping Nigeria positioned as one of the world's best performing. Remember that we overtook the Kospi, highest in returns in dollar terms. So the market has been doing, the market cap has gone from 147.217 trillion. That's how we started July. Now we're at 159.51 trillion. So obviously we've had positive movements. The current ASI slightly lower than its peak. It had peaked at 247, but slightly lower. We're still at 247. So we're not doing too badly. Major drivers of this, we see that the market has responded violently to the first half results. We have seen impressive we saw a stock like First Bank react to this. A lot of investors made some money. Also NGX, the parent of this trading that we have, they also had some good announcements and results. 118% surge in revenue to 17.60 in the first half, and then heavy institutional buying has been, so that we know that the pension fund has also been a major driver of the positive movement we've had at the NGX, and we've seen a lot of concentration on the tier 1 banks. We saw Wema also go up that way. Stronger local earnings combined with stable foreign exchange conditions have boosted both domestic and retained confidence. Let's speak to Mr. Omodio now, joining us to give us more insights on this and perhaps what we could expect as we get to the end of the month. This year we have Mr. Ambrose Omodio. Mr. Omodio, good afternoon. Welcome to the program. So, we see 6.66% return so far in the month, for the month of July. Can we expect it to hit 10% by Friday as we end the month of July? Is that too much to ask for?
Yeah, it's too much to ask for. I will tell you, it's too much to ask for. This is not the end of a quarter. The end of the quarter, especially that window dressing for end of the quarter, we're gonna push it. For this a monthly end, most times we don't react to monthly end in Nigeria. For the mature market, we can react to end of the month. But here, because most of the portfolio managers do the account in every quarter, that is why at the end of the quarter you see window dressing. But for this month, it means that the earnings that are in the market are really beat expectation. That's why we're seeing some missed numbers. The majority of them were seen that from, like you just mentioned in your intro, the one that came from the NGS, can see that increased activity on the market have impacted their performance, which also reflected on their bottom line. On that, I recommend the kind of rewarding shareholders with about $1.30 Kobo into dividend. But we're looking at the general market valuation. Even at this point, you said that the market return just 6.6. For me, I just smile. Don't forget that in the month of June, market, overnight, so speed that market lost from the peak of 2,500 and 67 basic points down to almost below 240. But now markets are rebounded in the month of July because of what the earnings expectation, and these numbers are coming, and also investors are happy that it shows that the company invested, they are still some light, that those companies are still very, very much strong. But I believe that as we see more earnings between today and the 31st of July, it also adds momentum to the market. But I believe that, like we just said, institutional investors that understand this market, they don't react to results as results hit the market. It's individual investors like me and you that react to results, but they take time to analyze their number, to then do their diligence, and also their committee investment committee will approve it to now come back to the market. Yes, we will see that because the election is coming closer, that foreign investors will be running back from the market. For me, I don't plead to that, because from 2000 and or 2019 or post-COVID-19, we have seen that our local institutional investors have supported the market for straight 7 years that the market have rallied. They are still in the market. Now that the PECO have given a lot of window for them to invest in the market, I see that the people sustain our market even during the election. Right, actually, I agree that in the election there's a lot of uncertainties, but because they understand the pattern of Nigerian market, they are here. They know that every 4 years our market will have to slow down a little because of the election. But in Nigeria, election have not killed our market for anything. After election, we see another rally.
We'll still continue. But Mr. Modio, what do you see as the next driver of the market at this point? The earnings, I mean, they're thinning out. What's the next driver? Negative or positive?
Earnings is one of the things that will drive the market. One, the next thing that liquidity that comes from election spending. Like I saw one of the programs, they said that foreign investors will be going out of the market. Fine, because they are allergic to what risk. But we'll have our own institutional investors that are here that support the market all this while. They are still here to support our market. And I said earlier that the PECO have open window for them to spend more on the equity space.
Yeah.
For me, there's no cost on it.
After all, about 90% of investors in the market now are domestic. So, I mean...
Yeah, that's why there's no cost for that. That's exactly. That earnings plus from election spending will add more strength or more energy to the market, but let's follow value at the end of the day. That's why as we speak now, the market price to earning ratio is below 12 times for me, so that the market is still cheap. That's why we're seeing this high. But I believe that also sectoral EPS will also price to earnings will also guide investors. But as we speak now, the banking sector is still very, very attractive because it had the lowest price to earning ratio. Look at bank like Zenith Bank having 4.2. A period that stock is giveaway. Look at the telecom sector that has about 49% times. Notice that there's a lot of potential in that telecom industry. Investors should invest with knowledge. Use all this period to know where to put money, because after the election, I'll tell you, Nigeria will be a boom. But I think that we're the best foreign market this year.
Right. After the election, and then also after the Dangote refinery appeal, those are two major drivers. But thank you so much. Thank you so much, Chief Operating Officer at Invest Data Consulting Limited, Mr. Ambrose Omodio. Thank you for your time.
Thank you for having me. Yeah, thanks for having me.
Yeah, so we still have some positive news coming, at least from the perspective of Mr. Omodio. And well, I want to key into it. It's good news, right? So we should all key into it. Well, so we see that the NGX retains that positive sentiment, 0.21%. At intraday, and then for Johannesburg it's also positive at 0.13%. When we look at the other market, Egypt is positive as well as Nairobi closed positive 0.55% yesterday. To the Middle East, it's a flip of it, and I wonder why. Seeing that there's anticipation of peace in the Middle East, but it's negative for most of the market there. Dubai is 0.83% down. Abu Dhabi is also down. Look at the other markets on the region, and then we would also see that they're all red. Tadawul and Qatar They are red. And then we go to the United States and see a mixed color right there for the US. We saw a drop in Nasdaq, and then also in S&P. Just the Dow Jones was able to. Semiconductor names are down. Semiconductors, they're down, and they're major drivers of those red colors that we see in the United States. Hong Kong, talking about Asia, that's up. Nikkei is down, Kospi is down, Hang Seng is up, mainland China. And the gains in Hang Seng were led by utilities and consumer non-cyclical sectors. Those went up 0.58% and 1.95% and all of that. And Nifty is also down. Also, let's see what's happening in Europe. We have joining us Chip Chiponda Chimbelu. Hi, Chip. Welcome to the program. What's the market's color this afternoon?
Well, things are not as green and as positive as yesterday. The stock 600 is pretty much flat, and so is Germany's DAX. European shares have, of course, been subdued because of the global sell-off in tech stocks, but lower oil prices are continuing to lend support, hence the markets being a bit flat, and tech stocks continued their decline today from Monday. The tech sector's decline, of course, triggered a sell-off in the semiconductor stocks that you mentioned there, and the shares of that chip maker ASML are actually down, we're down 2% in the session earlier today. And here in Germany, the latest auto industry earnings show that the outlook is still gloomy for that industry. Now, Mercedes-Benz cut its sales forecast due to declining sales in China, but the German car maker was still able to book a net profit in the second quarter, and that was partly because of the effects of its cost-cutting measures.
So yesterday with our UK correspondent, we did speak about extreme weather, and of course, you guys in Europe, you're also feeling the impact, and not just the humans now, agriculture is also feeling the impact.
Indeed, in fact, the head of the Chamber of Agriculture in Germany's most populous federal state, North Rhine-Westphalia, told DW that 2026 is another difficult year for farmers, and that is mainly because we had a heat wave at the end of last month here in Germany, and for many farmers, that was terrible timing. Many crops were, of course, still growing, and that has, of course, also especially hit corn farmers in Germany, where the extreme heat coincided with the corn flowering period. So what farmers are right now seeing is that the corn isn't forming ears in some places, and that essentially means that entire harvests could be lost, and the situation is, of course, even worse in other regions here in Europe, especially areas where peak temperatures exceeded 40 degrees during the heat wave in June. And France in particular has suffered some of the biggest losses, and as you know, we've all seen those terrible images from the wildfires in that country and also neighboring Spain. Now, overall, the European Association of Grain Traders, COSROL, expects EU grain production to fall by more than 9% this year, and that would be the biggest annual decline in more than 2 decades, And extreme weather, of course, isn't the only challenge that the agriculture sector is facing in Europe.
And what are the other challenges?
Well, the Iran war has also affected the sector, not just because it relies on energy as well. The Middle East is a hub for nitrogen fertilizer production and exports, and so the Iran war and the disruption it has caused has led to higher fertilizer costs, and that has, of course, the potential to drive costs elsewhere. We could take a look at grain, for instance, which is used to feed livestock, and in particular cattle, for instance, isn't just for beef production, it is also used in dairy products. So the grain harvest decline comes with a cascading effect on other agricultural products as well, and it will also have an impact on global food markets. And Russia's ongoing war in Ukraine is also hurting global grain exports. The Black Sea shipping route, through which 90% of Ukrainian agricultural exports pass, has been facing tremendous pressure as Russia ramped up missile attacks. So there are not too many alternatives to make up for the reduced harvest in the EU this year. So it is, of course, bad news for global food markets, Ini.
Yeah, and it's affecting everybody. It's not just in Europe, unfortunately. But thank you so much for giving us updates on that, Chip.
Thanks, Ini.
Let's go to the crypto space now, and we start with the red colors. We see that Bitcoin has dropped 2.32%. The price is now at about 63,500 for that. Ethereum has gone back to 1,008. We say this is a resistance point because most of the time it just settles at 1,008, 1,890. That's what Ethereum is at, and we see a whole lot of red right there. But let's see stories making the rounds, and unfortunately today we do start from Nigeria. We know that executive order from the president. I think that's moving things really fast in the crypto space in Nigeria. Quidax is the first digital assets exchange to receive provisional license from Nigeria Securities and Exchange Commission, and that's today. The expansion of its stablecoin infrastructure to more than 21 countries and 14 currencies. That enables startups, fintechs, and global enterprises to move value seamlessly across Africa and key international market. Congratulations to Quidax, and of course, with that executive order, we'll see things moving even more. International Monetary Fund is stepping up scrutiny of Brazil's growing stablecoin market. That's raising concerns over potential risks to financial stability and capital inflows. And then also a federal lawsuit against Apple, alleging that a fake Bitcoin app distributed through App Store cost them to lose about $1.8 million. Talk about trouble brewing for Apple. That's also a story to look out for, fake Bitcoin app. Well, those are the stories that have got our attention this afternoon from the crypto space, and that's it for Business Incorporated today. Thank you so much for being a part of it. We always appreciate your time and your presence. I'll be back tomorrow, God's grace.